And I guess part of this too is as you think about this, like, are there elements that you can use the data for, whether it's investing or other applications than just putting it in a database and selling a subscription to it? Or is it really just, hey, we've come up with a very kind of clever, unique way to take that audio, put it into a database, and the best way to monetize that is by selling those subscriptions?
So that was the first piece. But what I started realizing is a lot of these founders would then rely on me for benchmarking data, which then they said, Nathan, can you help me with my board deck? Can you help me raise? Can you help me sell? And so I helped these companies, I would, hundreds of millions of dollars worth of deals, right? Whether it's raising, selling, whatever, buying other companies over like between 2016 and 2018. And in 2018, I said, you know what? I should start doing some of these deals myself. So I started writing checks into VC funds as an LP and watching how the VC funds analyze these companies to learn. And I realized, wow, I think the real opportunity here is actually to create a new asset class. And what I mean by that is, software today, Salesforce really brought it in, I would say 2007, 8-ish. But there's now a standard set of metrics that every software company, private or public, should be tracking, right? Obviously MRR growth, ARR growth, CAC, churn, ARPU, net expansion, net revenue. Like there's probably 20 key metrics. And if you have all those metrics for a large amount of companies, you can start generating a credit score for SaaS companies. And you can then loan against the credit score. Or if I don't do the loan directly, I can sell the credit score to a bank or to a VC firm who's running diligence on the company with the founder's permission. And so this credit score, is, you asked, is it just a clever way to create the podcast, to create a database? The answer is at first, yes, sure, to make money. But now what I'm doing is I'm using this massive data set. We're tracking about $20 billion in real-time revenue from private B2B SaaS companies via their Plaid connection to our tech stack. So we have direct access to their bank accounts. We generate a credit score, and then we help them raise capital really, really cheap based off the strength of their credit score. And that's how a lot of them are growing and keeping more of their companies via the old route, which was, again, raise VC, hope you own 5% when you go public.
Yeah, and there's obviously a number of companies that are starting to do this, and I think that it's incredibly clever because of your point about not only one, a new asset class, but also two, the ability to get the data. Right, there was always data there for a lot of these companies. Now you can actually get it through a technological solution. What do you think the risk is, or if you looked at this and had to play kind of devil's advocate with yourself, what is the thing that you're like, hey, here's where we could mess this up, or here's where it could actually be a negative thing that to kind of counter all of those positive aspects of this?
You try and study history, right? So you study Milken and junk bonds. You study general just debt and how debt is used in governments. And you just try and study debt historically. And so the critical things with any debt is you have to establish what your loss ratio is going to be, which is a bit of a trick question when you're raising capital, because if someone asks you what's your loss ratio and you say we haven't had any losses, they're going to say, well, your sample size isn't big enough. You should have losses. And if you say you have a 1 to 2% loss rate, which is generally healthy for people with large, loan tape debt books, they're going to say, oh, well, you have 1 or 2% losses. It's not good. So you can't win answering that question. It's a bad question. That being said, what I'm trying to do is build a structure where I can deploy capital into SaaS companies, less than 60 seconds after they connect their bank account with our tech stack, because I can run the credit score very quick. So I don't need an underwriting team. I don't need a fancy office space. It's just a credit score. And when you add up all the private software companies in the world today, there's a lot of different estimations on what that total value might be worth, but you can just look at the public SaaS market, look at the Bessemer Venture Index. I mean, this is going to be a trillions and trillions of dollars here over the next 10 to 20 years as software continues to eat the world. I want to be the guy that has the best data on software business risk, which will make me hopefully the top source for debt into that space. And so I want to build, $100, $200 billion debt portfolio into software companies over the next, call it, decade, 2 decades.
And do you ever have any aspirations to go outside of the SaaS companies, whether it's into e-commerce or other types of subscription businesses, or do you really feel like that SaaS niche is big enough and also kind of the sweet spot for you?
The question I spend a lot of time asking myself is, what is my unique advantage? Like, what is the moat that I've built? The distribution moat that I currently have built is totally focused on software. the magazine, the database, the podcast, it's all software. It's not the e-commerce show. It's not the e-commerce magazine. It's software. That's where I have just a massive advantage. So for the foreseeable future, I'm going to hyper focus on software. And by the way, there are so many great products for like e-commerce brands, whether it's PayPal Cash, Stripe is now doing advances on your daily revenue. There are companies like Clearbank that have raised a lot of money that are doing, 2-month, 4-month terms on your Facebook ad spend via your, Shopify just launched Shopify Money. You saw our friend Danko just joined Shopify full-time to help build that. So by the way, everyone's going to get into this space. You're just like AWS is going to start, doing more loans against AWS spend. This is going to be a very popular thing. What I'm going to try and do is loan money to software companies where there are no restrictions on how they spend it. You can spend it on people, you can spend it on your Facebook ad spend, or you can spend it on your AWS spend. But my goal is, because I have the largest data set, is that I can best price the software company's risk of default. And because of my best pricing algo, I can give them the cheapest price. And in this space, in my opinion, Pomp, because I'm not like a VC selling my network value if you take my money, it's really just who can give you the cheapest capital. So I think this is a beautiful thing to leverage for me, which is if capital is actually how you scale, that is the network effect. As long as you have the asset of the data, you can win. And I do think debt into software is going to be a zero-sum game. There will be one winner, because whoever builds the most loan tape the fastest can get back leverage, collateralize, securitize the loans, drive their costs down, and pass savings on to founders.